over there. He'll obviously explain all that to you. But one main thing is, during these times of the COVID-19 coronavirus, however you want to call it, a lot of real estate investors are wondering, how should they shift? How should they pivot? What should they do? Should they pull back? Should they move forward? Well, David is involved in a lot of investors that are doing that, guiding them. He also is a capital partner, so he's also working with capital investors who bring private mortgages to you. So anyway, David, yeah, man, take it away, man. Tell us how to do it. Tell us what's going on.
Yeah, thanks for having me on your show, man. You've been killing it these last week and a half or so with all these interviews. It's been awesome.
Oh, thank you, man. I appreciate it. I'm trying.
So yeah, it's a little crazy out there right now in reference to the markets. The one thing that well, there's a lot of different points that I'd love to make. I don't know where you want to head with it. As far as general markets or real estate over the last, first of all, disclaimer, I'm not like a wealth manager. Everything I say is my opinion, so on and so forth. But it's been absolutely a wild ride to watch what's happened and how quickly it's happened over the last several weeks. And I think the word of the year that I've continued to hear from investors and people that have been mentors in my life, people that I look up to is the infamous word pivot, right? It's time to pivot. And what's getting a lot of play, it reminds me of that show, that episode with Friends, right? Where they're trying to get the couch through the stairwell and whatnot, and they're yelling out pivot. It's pretty funny, but
yeah, I think Keller Williams would call it shift.
Yeah, there you go.
A lot of different.
Yeah, it's insane. So there's a lot of people having to shift right now. So yeah, I don't know where you want to go with it, but at the end of the day, we're, looking at how data is being disseminated, it is, being thrown at us like out of a fire hose, right? Like it's buckets and buckets of data. Every day. And a good friend of mine who's a wealth manager, wealth advisor, on one of my initial interviews that I did with him recently, he summarized it by saying, the types of headlines that we've seen over the last couple weeks are the types of headlines you typically see once in a year, right? And so we're seeing multiple massive headlines, announcements,
daily
moves, right, by the Federal Reserve, the president, our economy, job reports, unemployment reports, now like you're seeing loan applications, they just released that loan applications have dropped 18%, right? So home buyers are now starting to reduce, they're starting to hold back, their money and not move forward with purchases. So there's a lot of these headlines that we're seeing. Typically you would see maybe one or two of those in the course of a year, not all of them in the last 3 weeks.
Yeah, it's been insane. I know that I know you have not only, so you work with a couple different type of investors. So if anyone knows, David works with investors that buy property and then also investors that loan money, correct?
Correct. Yeah. So we're turnkey, and so we lend our own capital. We also, work with lending partners as well. So if there isn't something that we would lend on personally, then we would, broker that out with one of our lending partners to get that deal closed at the most favorable rates to the investor, right, to our client.
Cool.
So we do that, and then in addition, then we're also buying properties, flipping and things of that nature as well, building out some passive portfolios. Yeah, and a lot has shifted in the last 3 weeks. I know you and I kind of had a conversation, I don't know, a week or so ago, and in reference to access to capital, and basically the majority of capital in the market in the private space has pretty much dried up. There are still, there is still access to loans. There is still access to private capital, but it's turning into true private capital now, not institutionalized hard money as we've seen in the space over the last couple years.
Yeah, so I'm Myself, I have two rental properties, by the way, that that David did help me with. If anybody knows the Encore Real Estate investment team out there, they helped me find the properties, and then David helped me um, do the private money and secure them. We were in the process of doing what's called the Burr method, and we had a blanket loan set up that we were in the process of, excuse me, of refinancing it, and then all of a sudden, bam, the rug got pulled out from under us. So we are seeing lending stop there now. Um, let's say, so with everything going on as far as with the um, mortgage forgiveness and rental forgiveness, I know I had the attorneys from Kendrick Law on yesterday.
Yeah,
Obviously, this is only with secured backed loans.
correct.
What have you been seeing on the private sector? Are private lenders saying, "Hey, David, listen, if you reach out to our tenants and they're having some issues, we can do some extensions." What are you seeing offered there? Is it on a investor by investor basis?
Yeah, I mean, I would say for what I'm seeing, it's investor by investor on what they're able to do. Obviously, as you clarified, it's it's not a traditional mortgage. It's not your private primary residence, and it's not one of these regulated mortgages per se. So it's a business transaction. That said, everyone's in this together. So I am seeing collaboration. I'm seeing some understanding and work happening, compromises and stuff happening to
And people willing to help.
yeah, you know what I mean. Everyone's going through a tough time right now. But the biggest thing that I would say is one of the things is definitely access to the types of programs that have been in the market over the last several years that everyone is used to. That's pretty much gone. I mean, I don't know of anyone that is offering anything longer than a 6 to 12 month term on a loan. And again, these are the traditional hard money, private money type loans. If you can still get banked in a traditional loan through a regular bank, then that they might still be funding that. But on the investment side, definitely there's been a limitation. The LTVs have dropped significantly, so your loan to value that you were typically going for is not going to be there. You're not getting 85 percent, 90% of purchase, any of that. A lot of lenders are dropping it to 65, 70%, right, where you're having to put 30, 35% down now on a flip. And then they're going to make sure that their loan to value ratios are a lot lower than what they were prior, to be able to hedge against the risk, because everything's uncertain right now. They're not sure which way the market's going to go, because we just came out of and technically are still in a very strong economy. And there are a lot of things that could happen that could potentially cause our economy to bounce back in this, third and fourth quarter of this year. But the big question is on longer term notes, what if it doesn't, right? That's the biggest thing.
And so I know that a lot of local real estate companies, whether they're wholesalers, investors, um, capital investors, note buyers, whatever they might be, they hire Goel and David. And so you had them strategize in a certain direction right before this. So
Correct.
now I'm one of your investors that that have hired you to guide me. And
Right.
what guidance are you giving your investor? Are you saying stay on track on flips and holds? Are you saying stick with cash flow? Are you saying don't do anything right now, pull back? Are you adjusting offers? What kind of guidance are you giving them?
Yeah, no. So the fun thing about where we're at right now, whether it's just short lived and it's the next 60, 90 days, 6 months, we're really in a space now where only true investors are going to be able to play, right? And I say true investors not to discredit or offend anyone, but at the end of the day, there was a lot of money in the market that was very, very cheap, very limited money down, if not no money down, right? Where people are being able to get into properties with very, very little and very little risk.
Real
Whereas
cash,
now,
right? Now you got to have real cash, right?
now you got to have real cash, right? Now it's down. Okay, who are the players in the market that really have the cash to be able to do deals? So, that's one thing that's going to definitely sift the market. In addition, it's going to, I think it's going to create plenty of opportunity. So for investors that have listened, have prepared, have put away cash, they've become more liquid. They haven't overextended themselves. They haven't been living high on the hog and spending all their extra, income that they've brought in. And if they've put money aside waiting for this time, then that coupled with true private money that's in the market, then we're still going to be able to push forward and do some phenomenal deals, especially if this extends, right? The longer this goes, the better the deals are going to get for, investors with cash in hands. So my advice is we're continuing forward, but we're now becoming much more bullish, much more aggressive with our offers, meaning in the opposite direction, right? As an investor, because what's been happening is because there's been so much, feeding frenzy in the market, investors were doing just stupid deals, like just stuff they shouldn't do, and they're just like, just to keep their money moving and keep their guys working, they're settling for, a 14, 15% return or whatever on a flip, which, is high risk because it can potentially go haywire. Your budget, you could overrun on your rehab, so on and so forth. And, next thing you know, you spent 90 days in a project or 4 months in a project and, you walked away with $5,000 or something, so now we're becoming more aggressive with our offers. We're offering much less than what we would typically be offering in the previous market. Definitely taking less risk. We're not as aggressive or not as confident in the ability to be able to liquidate those properties. So you're having to factor in more hold time. So again, if you're doing a flip, right, you're going to have to factor in more hold time when it comes to this. So rather than just doing your standard, 3 to 6 month period of hold time, we need to be looking at 8 months. You need to be factoring in 12 months. Like, what if I have to hold this for 12 months? That's a very real scenario. We always ran those numbers before, just in case, but it was it was much more likely in the previous market 90 days ago that you were going to, sell that property, within 30 to 60 days, especially in certain markets. So we're just getting much more aggressive and using more caution in analyzing the deals. And what's going to happen is that, true investors with cash in the market in their pocket right now, they're going to be able to cherry pick, which deals they really want to work on and which ones they don't. So we're moving forward with that. And then in addition, our strategy has always been passive, right? Is build up a passive portfolio, build up cash flow so that in these difficult times, you still have that cash flow coming in on a monthly basis to help you, overcome the lulls in the market.
And how about, excuse me, sorry. I'm good, guys. I don't have it.
Bless you. Was that sneeze? You're on quarantine for 40 days now. Sorry.
Yeah. Folks that are already in a private loan with you, they're typically termed 12 months or 24 months. With this current situation where, as you know, we were trying to refi mine and we can't, are those investors going to give some term extensions or some time for folks to get the money back to them once we're out of this?
No, we figured you would just hand over those properties.
That's an option, right?
So start collecting rents. No, obviously, yeah, we're gonna work to see what's gonna happen. I mean, things will settle down over the next 60 days, 90 days. At some point, we'll get to some sort of new normalcy, whatever that looks like, right? Because it's definitely not going to be what it was before, at least in my opinion. I just don't see us bouncing back. And with the numbers, and it's not just me, like we're seeing people from the very top, now really saying, even with what we're dealing with right now, right, with the virus, whereas the president, a couple of weeks ago was like, yeah, by this weekend, by Easter weekend and stuff, we're going to be back up and running. Yeah. Then it's end of April.
He's dreaming.
Yeah, we're seeing end of May. I have, personal friends of mine down in South Florida that, friends or family, not my family, thank God, but, others that, just recently contracted COVID, right? And so they're on like mandatory house quarantine for 40 days, so they've got to make sure, and then now that's all the talk of, well, even when we hit the peak of this viral infection and we start to come down, there's a period of time where we have to make sure where it lulls long enough, it's dormant long enough to where we don't just release everybody back out and it spikes again, right? So, you're looking at 60 to 90 days, right, before I think we have any real return to whatever normal is going to look like, and that even may be aggressive. So we've got to do what we got to do. So whether we have to figure out different refinance options, whether we work on extensions with you or what have you, we're always going to figure out what works best for the, for the client at the end of the day.
Yeah. And so I know that when somebody hires David Pavlik and his team over at Goel Worldwide, they get obviously guidance investment wise, they get guidance strategy wise. I also know that you mentor them as far as money mentoring, because I know that's big into your wheelhouse. Faith, obviously you do have a big faith-based backing with Passover coming up. I can see behind you, you're getting ready for that.
Yeah.
And
yeah.
you also bring a marketing strategy to your clients. And
Right.
what does that strategy starting to look like now? Obviously, before there had to be a different kind of strategy than there is now. There's got to be a lot of people adjusting or shifting, or what
Right.
what are you doing for your clients, or
Yeah.
do they need to contact you to get that secret sauce?
No, I mean, no, listen, at the end of the day, I want to help people. Right. So so across the board, everyone's having to pivot, right? That's why I keep using that term. Or what did you say Keller Williams uses? Shift?
Shift, pivot.
Yeah, you have to shift, right? So, there were some things that we saw moving into the market on the financial side. And again, I just give opinions and help people, share people, systems and processes and really, and I can't really take credit for any of it. I've had some amazing mentors, from True Wealth Formula, Hans Johnson, multimillionaire is releasing a new book, coming out and working with his material and his stuff. And we've implemented some of these things like in our congregation with people and, Danny Johnson and her war on debt material and stuff. And it all comes down to just being fiscally responsible, right? Like looking at basic ones and zeros, ins and outs, right? And going, okay, we can only sustain debt so long, right? Like we can only keep spending more than we're making for so long until, the note gets called, right? Like we're going to have a moment where we're going to have to pay this. And so knowing that at some point, whether it was this year, next year, the year after, there's going to be a correction, getting people ready to be in a place where they were liquid, where they were not overly heavy on debt, or even overly heavy on certain types of assets and stuff that, that just use some of these even books that are just out there that teach these principles, so that you're in a position that when the market shifts, you're ready. Like you're not over leveraged, where you're not having to worry and stress. And, that's one of the things too, that just to kind of rabbit trail for a second, is one of the secondary deaths or effects that all of this is having on people, is maybe even more so, and the numbers don't even show it yet, is like deaths related to like stress and heart attacks and, the different types of disease and things that people contract because of stress, because we know stress kills. So we've tried to help and coach and tell people as much as we can, look, get in a place where you are liquid, where you're not way overextended your means, give you some basic formulas that you can live by that will help set you up for success during these times of trial, right? These times of test. It always reminds me, and I always think back to like the story in the Bible of Joseph, right? Where there's this interaction where he has a dream, or Pharaoh has dreams, and, Joseph gets called to interpret the dreams, and there's 7 years of plenty where his, cattle is fat and happy and eaten, right, and everything else. And then there's 7 years where those cattle end up like just skinny and, emaciated, and there's, no food. And so, there's an interpretation. It's 7 years of plenty, 7 years of famine. Get ready during the 7 years of plenty for the famine, right? And store up your reserves and get ready. And so unfortunately, human nature doesn't always do that. We like to live in the moment. We overextend, we overspend, so on and so forth. So we coach there. And so now, like, as soon as the market starts to shift, then our people are ready to pivot, right? They're not having to unload heavy assets. They're not having to unload, a lot of debt. They're not, overextended above their means, they're agile, right? And so part of it comes there is, and there's still time where people can pivot now, right? We're seeing even fluctuations in the market, and there's still an ability that if you're overextended, if you're, you know, overly weighed down by things, by stuff, or by assets that you can't move fairly quick, then you may want to consider doing that. Again, just my suggestion, my opinion. Go talk to your attorney, your CPA, your wealth advisor, your, you know, whatever. But, you know, when the market drops, you want to be in a position and in a place that you're as liquid as possible to be able to take advantage of the opportunities that are going to be presented to you, right? Because there's opportunity in every stage of the market. So from an investment side, it's that. From a marketing and business side, yeah, you may need to reinvent your business, and now is the moment, now is the time to move quickly, right? Like if you move quick out of this, you know, this whole chaos that we're going through, there will be new businesses created, there will be new millionaires made, there'll be new inventions that come out of this. There's going to be a whole new way of life that's going to come out of this. So there's a ton of opportunity. Don't get caught up in all the chaos and fear and news and everything else. Like figure out what problems are being presented right now and how can I create a solution for that? Because at the end of the day, you get paid when you bring solutions to problems, and the bigger the solution you provide, the bigger the paycheck, right? And so that's what we're, you know, helping and coaching with, whether it's, you know, in your business, helping you revamp your business, restructure, helping it fit, you know, pivot, helping it shift, you know, and looking at ways that you can do that. And then how do you broadcast that in marketing, right? Like how do you leverage marketing today to be able to tell that story and tell that message so that your business overcomes this and thrives post this correction?
Yeah, that's awesome. I mean, I've always wanted to have a little show like this, a little live Facebook interview interaction. And I just never did. I was always tied up with other things and sitting here at home and then towards the end of last week, and I know I reached out to you and I was like, man, I need some interaction. I'm going,
right. I'm going nuts at home.
Yeah. So this has really kept me sane and kept my, you know, my mind right. And something I want to say too, I mean, if anybody wants to get their voice heard and wants to come onto this show, has opinions, has questions, anything of that sort, please reach out to me. That's, I really want to get out there what people are doing, how this is affecting you. And there's a lot of people that want to know how to adjust and shift and pivot, et cetera. So
sure,
it'll be great. And I know you've got the holiday starting tonight, right?
Yes, sir. Passover begins this evening. So we're gearing up for that. Pretty excited. We're doing our first ever, again, just new opportunity, right? New things happening. First ever virtual Passover. So we'll be live streaming our Passover through Zoom, with our congregation. And, you know, we had to kind of get geared up for that, set up for that. And it's going to be, I think it's going to be a blast. And it's fun to see people, you know, having to take ownership and do things differently in their homes now, you know, because they're used to a communal, congregational one, right? Where, you know, I'm leading it with my leadership team and we all kind of come together, which is nice. But this year it'll be a completely different dynamic.
How do you find the matzah?
Listen, you hide it and you just tell people to go find it. I don't know. Let's figure it out, bro.
That's cool. So when we get off, please put all your information into the feed, into the comment feed, how they can get a hold of you for everything. Sure. Also, if they want to be involved in your shul, if they want to be involved in the Zoom Passover, if that's something that you're welcoming, please put all that information down there. I can vouch he's helped me immensely over the last year. So I'm very appreciative. I actually hired him myself. So I am also a client. So it's great. He's got a great team around him. And we'll have him on hopefully every week, right? Telling us about adjustments and what's going on.
Yeah, I'd love to bring some updated details every week. You know, the one thing I would just tell investors and people out there, like, look, now's not the time to gamble, right? Like, you know, up until the other day, like still, I've got guys that are like trying to scrape together their last $1,000 to put together a deal, you know, and they're like, can I just get, you know, can you give me a little bit more on the loan? And I'm going to try to take out a gap loan and another loan and maybe just see if I can get an extension on my credit card because I'm ready to get into the flipping game. And I'm like, dude, do you not see what's going on? Like, that's
Well,
insane.
that's the people that aren't staying home. They're still out walking these properties. And unfortunately, like real estate agents, that's what they have to do to live. But
Yeah, for
the
sure.
other guys that are out there doing stuff, I mean, just man, give it a break for a minute,
Right.
relax.
Well, yeah, I mean, I get the business side of things, right? That you've got to feed your family, and people are just like, okay, what do I do? And pivoting is easier for certain maybe individuals than others. Certain businesses are going to be a lot more difficult. Like, some people are going to have to learn brand new skill sets, right, in order to be able to pivot, right, to feed their family. But look, the thing is, don't gamble with your money. Now is not a good time to gamble with your money. And I'm seeing it across the board, that message, whether it's in real estate or even in stocks. Like, I see a lot of friends, a lot of people out there that are gambling with the stock market right now, and it's all up and down and up and down. And they're like, buy low, sell high, right? Buy the dip, sell the peaks, buy the dip, sell the peaks. I'm like, yeah, that's, if it works, you're going to look like a hero, right? Like, if, but, investors think about risk management, and it's all about risk management. And that's, true investors don't lose money, right? They do whatever they can to not lose money. So they're always mitigating risk. And we're in a very volatile, high risk market right now, whether real estate or stocks, whatever it is that you're in. And now's not the time to, to think that you can't be touched, that it's not going to happen to you, and be risking money that you can't afford to risk, especially, right? Like, listen, if you've got your slush fund that's, on the side, that you can afford to walk away from that money and it doesn't hurt you, like, that's on you, like, go for it. But I see people like literally trying to pull together their last penny to do a deal. And I'm like, look, I'm not going to fund you. Like, put that money aside, keep it for a rainy day, wait for a better deal. This isn't the right market to be, playing around with and like just taking a gamble. Focus in on good areas, focus in on high, movement areas that are, the properties are moving real well. And, you're not out in the sticks somewhere and stuff. Like, you've got to have a sound mind in this market right now so that you don't lose money. So anyway.
Sure. Well, man, I appreciate it. And thanks for coming on. And I know
Absolutely.
we talk almost every day, so I'll hear
Yes,
from
sir.
you again. We need to get Dally on talking keto, right?
That's it. That's it. The keto, but how to stay healthy, boost your immune system, and be keto even in a down market. Come on, man.
Yes, we get Dally on. Tell her to click the link and sign up. We'll talk keto.
I'll tell her. I'll tell her.
All right, man. You take it easy. Thanks.
My brother. Thanks for having me on. Take care.
Yes, sir.